Welcome back to the deep dive. Today, we're digging into Johnson Controls JCI, a 140-year-old company, a real giant in building tech. We're looking past their strong fiscal 25 numbers to really understand their strategy for 2026. It seems quite aggressive, actually.
Exactly. And what that strategy means for some really high-growth sectors.
Right. So our mission here is to unpack two big drivers for JCI. First, this intense internal focus on operational efficiency. They call it their proprietary business system. And second, we need to look at their major technology bets. Think advanced data center cooling, for the AI boom and also global decarbonization.
And the foundation for all this looks pretty solid based on their recent results. JCI wrapped up its 140th year with, 6% organic sales growth?
Yeah, 6%. And importantly, their adjusted segment margins expanded by a full 100 basis points.
Which is significant.
Very significant, especially because they managed to offset the earnings dilution from that big divestiture, the residential and light commercial HVAC business.
And they did that fast within a single year, right?
Exactly. That was definitely quicker than they initially planned. And financially, they seem very disciplined. Free cash flow conversion hit 102%.
That 102%, that's a key number. For listeners, free cash flow conversion basically shows how good a company is at turning its reported profit into actual cash it can use.
So over 100% is good.
It's excellent. Signals really strong financial health, quality earnings. But here's the big one for future visibility. Their total backlog.
Yeah.
It expanded 13%, hitting a record $15 billion.
$15 billion. Wow, that's guaranteed revenue already on the books.
Gives them incredible visibility, yeah, and confidence in those ambitious forecasts we mentioned.
Okay, that makes sense. So let's unpack that first pillar then, operational excellence. It sounds like the driver behind this success wasn't just the market, but this internal thing, the proprietary business system, or PBS. But, doesn't every big company have some kind of business system? What makes JCI's, truly proprietary beyond just giving lean principles a new name?
That's the million-dollar question, isn't it? Look, the core structure is built on familiar pillars. Simplify, accelerate, scale. And yes, it uses things like the 80-20 rule and lean methods to cut waste.
Okay.
But the proprietary angle seems to be how they amplify those basics, using modern digital tools and increasingly AI. It's about turning classic continuous improvement into something repeatable, standardized globally, and boosted by technology.
Let's pause on those basics for a sec. The 80-20 rule, the idea that 80% of results come from 20% of effort, roughly. How does a company like JCI apply that to its huge product range?
Well, it's about focus, resource allocation, really. Applying 80-20 helps them, simplify their product lines. They focus engineering, manufacturing, energy on the 20% of products or features driving 80% of the profit.
Okay, so cutting complexity.
Right. Frees up capital, frees up people, and they seem serious about embedding this. They mentioned over 700 people actively involved, and they've run over 50 of those intense improvement events, Kaizens.
Okay, Kaizens. Got it. Let's get to the proof point, though, the aha moment. Sales productivity. The material said that in one local market, for conventional HVAC sales, sellers increased time spent talking to customers by over 60%.
Yeah.
How did they do that? That sounds almost too good to be true. Did they just work longer hours?
No, it wasn't about working harder. It was about working smarter. It came directly from simplifying the process. They basically eliminated steps that didn't add value. Think redundant internal approvals, extra data entry, maybe time wasted fighting with clunky old sales tools during quoting.
Ah, the administrative burden.
Exactly. They streamlined the whole sales workflow digitally. So less time navigating internal stuff, more time actually selling and building relationships.
Yeah.
And what's interesting is their next step, applying AI to estimation and selection, trying to automate some of that complex technical sizing.
Okay, that makes sense. Streamlining admin. Now, beyond sales, manufacturing reliability is crucial, right? Especially for data centers.
Absolutely critical.
So what progress there? Factory execution.
They specifically targeted on-time delivery OTD in a key North American chiller plant, one that serves that really hot data center market. OTD had been inconsistent, apparently. And in critical infrastructure, inconsistency can kill you.
Right.
So applying the same PBS ideas, 80-20, lean mapping, digital tools, they pushed OTD dramatically higher, over 95%.
So reliability becomes a key selling point now for those hyperscale clients.
Definitely. And speed, too. That
Yeah.
builds a huge competitive edge. They're apparently on track to cut lead times in half for this key chiller type.
Cut lead times in half.
Yeah. In a market where everyone's racing to build AI capacity, getting top tech delivered faster is a massive advantage.
That speed and reliability improvement sets up the second pillar perfectly, the growth drivers. They're clearly betting big on these mission-critical verticals. So, okay, they're building chillers faster, but are they building the right kind for AI? We keep hearing AI chips generate way more heat.
That's the core issue. Traditional air cooling is hitting a wall,
Physically can't keep up.
pretty much. So we're seeing a rapid shift towards liquid cooling or hybrid systems. JCI seems to be positioning itself across the whole thermal management chain. Everything from the chip itself right out to the ambient air. They've got products for today's liquid cooling needs, and they're doing R&D for what's coming next.
So what's the key product for this immediate liquid cooling wave?
The main near-term thing, launched around September 2025, is their Coolant Distribution Unit offering, the CDU.
CDU. Okay.
Think of it as the brain and the pump for a liquid cooling system. It manages the coolant flow, the temperature as it circulates through servers and back to the main chiller. It's essential for deploying liquid cooling now. And they're offering scales, handling smaller setups up to like 10 megawatts.
Got it. So that's the immediate fix. But looking further out, they invested in something called Excelsius.
Hmm.
Why is that needed if the CDU solves the problem today?
Right. The CDU handles what we'd call traditional single-phase liquid cooling. Excelsius is different. It's a platform focused on two-phase cold plate technology.
Two-phase, how does that work?
Think of it like this. In single phase, the liquid stays liquid. In two-phase, the coolant hits the super hot chip, absorbs so much heat it actually changes phase to a gas right there at the source. Then it travels away and condenses back to liquid.
Ah, like a mini refrigeration cycle right on the chip.
Exactly. That phase change is way more efficient at grabbing extreme heat.
Right.
We're talking the kind of heat expected from high-power AI chips maybe 4 or 5 years from now. So Excelsius is their bet on staying ahead of the curve, technologically speaking, at the real cutting edge.
Okay, makes sense. Future-proofing. Now let's switch gears from cooling servers to, well, heating cities. Decarbonization. JCI is involved in a big project in Europe showcasing their sustainability work. Tell us about Zurich.
Yeah, this is a really powerful, real-world example of their large-scale heat pump tech in action. JCI is providing green heat to the city of Zurich in Switzerland, and the heat source. It's recovered from a waste incineration plant.
Using waste heat. Okay. And the tech itself. What's significant there?
They're using one of Europe's largest heat pump installations, and critically, it uses ammonia as the refrigerant.
Ammonia. Why is that important?
Ammonia has 0 GWP, global warming potential. It's a natural fluid, doesn't harm the climate if released. So this advanced system pulls excess energy from the waste plant's flue gases, cleans it up thermally, and feeds it into Zurich's district heating network.
And the impact.
It's pretty substantial. They expect it to heat around 15,000 homes. That's about 15% of the city's whole district heating demand. Shows they can deliver sustainability at an infrastructure scale. And more broadly, they mentioned their heat pumps helped customers cut energy costs by 50% and emissions by 60% just in 2024.
Wow. Tangible impact, leveraging those European regulations. Okay, let's wrap this up by looking at the financials. All this internal efficiency from the PBS, plus the external growth from data centers and decarbonization. It's led JCI to update their long-term growth targets. What are they aiming for?
The new long-term plan is mid-single-digit organic revenue growth and double-digit adjusted EPS growth, earnings per share.
Double-digit earnings growth.
Okay.
And key to hitting that is achieving operating leverage of 30% or better, plus keeping that free cash flow conversion around 100%.
Let's pause on operating leverage again.
Yeah.
30%. What's that actually mean for their profitability for listeners?
It means for every new dollar of revenue they bring in, they expect 30 cents or more to drop straight to operating profit. It's a measure of efficiency.
Higher the number, the better.
Exactly. Shows how well they control costs as they grow. That 30% target signals real confidence in the efficiency gains from that PBS system we talked about.
For fiscal 2026, next year, the guidance is even higher. Adjusted EPS around $4.55. That's over 20% growth.
Yeah.
And the operating leverage guidance for 26 is like 50%.
Yeah.
Way above the long-term 30% target. Why is such a big jump near term? Is there a risk there?
Yeah, that 50% leverage for FY26 is definitely aggressive. They attribute it to basically two things happening faster than expected. First, those benefits from the proprietary business system are kicking in harder and sooner than they may be modeled. The efficiency engine is firing.
Second, They're actively stripping out what they call stranded corporate costs more quickly. These are leftover costs related to structures or assets from those divestitures last year.
Ah, a cleanup effort.
Pretty much. So the 50% is kind of a peak, boosted by efficiency hitting early, and this cleanup. That's why it settles back towards the 30+% longer term. The risk. Simply timing. If the cost cuts lag or the PBS benefits aren't quite as strong, they could miss that high 20% plus EPS growth target for 26.
Got it. So a temporary acceleration. What about how they're using their cash? Capital allocation, acquisitions, dividends.
Priorities seem pretty clear and disciplined.
Yeah.
Number one is investing in organic growth, funding those data center and decarbonization projects we discussed.
Makes sense.
Second, returning capital to shareholders, so
Yeah.
dividends and share buybacks. Third is what they call selective acquisitions, presumably to fill specific technology gaps. And it also mentioned they're still simplifying the portfolio,
Yeah.
looking at options for about 10% of their current business, making sure resources are focused on the best growth areas.
Okay, so let's recap the main themes here. We've got JCI, financially disciplined, showing strong results, that 102% cash conversion, the huge $15 billion backlog.
Solid foundation.
Definitely. Then there are measurable gains from their internal operational system, the PBS boosting seller productivity over 60%, improving factory speed and reliability dramatically.
Real proof points.
And strategically, they're positioning themselves right in the sweet spot for advanced thermal management, from the CDU launch now to the Excelsius investment for the future. Plus, that leadership in big decarbonization projects like Zurich.
And maybe to tie it all together, especially for data centers,
Yeah.
what seems unique is JCI combining that faster delivery and tech innovation and cooling with their massive operational footprint. That global field service team, over 40,000 people. They explicitly called that out as a differentiator.
Right, because hyperscalers don't just need the gear.
Exactly. They need reliable, high-touch service globally for these incredibly complex, absolutely mission-critical systems. Downtime is catastrophic.
Which brings us to a final provocative thought for you, the listener. Given JCI's push to cut lead times in half, deploy advanced liquid cooling, and own that complex, high-availability service model afterwards, how much value does that whole end-to-end package really create for a hyperscale customer compared to maybe competitors who only do parts of the thermal chain? Could it be that service actually becomes the single biggest competitive advantage, the moat, in this AI data center race?
It's a fascinating question, especially in a market where, like you said, reliability is everything and downtime costs millions per hour.
Something to chew on. That's all the time we have for this deep dive. Thanks for joining us.